All right. So it's 7 o'clock. We like to start things on time, end things on time. So we're just going to go ahead and get started. For those who aren't able to make it or are a little bit late, I'll be sending out the recording as well to everybody so that they can watch it at their own leisure. So just to get us started here, obviously this is our crypto conversations. I want to thank you for taking the time out of your day to learn from and add to the crypto conversation. The intent of this weekly open forum is to educate the community about cryptocurrency while building an active, tight-knit community for future project development and investments. We also hope that these conversations will bring more awareness to the crypto space as a whole. Um, yeah. Yeah, to the crypto space as a whole. This is the first of many crypto conversations, and we're looking forward to learning something from each and every one of you. Each of you has something to share. Each of you has some kind of value that you can add towards this conversation. So we just hope that everybody is open to open dialogue. So the structure of the crypto conversations is going to be that within the first 20 to 25 minutes of the conversation, we will have a presentation. Today's presentation will be detailing the history of money, and the remaining 15 to 20 minutes will be an open forum Q&A session where you can ask about the topic that was discussed or any other topics that are related to the cryptocurrency economy as a whole. Also, tonight's event is sponsored by Ingrained Blockchain. Wanted to shout them out. They're one of our partners, and they're going to be involved with us for the entirety of our crypto conversations, and also using them to network with other cryptocurrency businesses as well. And so today, I want to get us started here on a quick PowerPoint that I put together in order to show a brief history of money. And I think in order to fully understand cryptocurrency, you really have to have an overview of what money truly is. Without the basic understanding of what money is, it's very hard to explain what cryptocurrency is, and what that means, and what innovation that it brought to the financial space. So, can everybody see this? We're good. Okay. So this is a quick presentation, and then afterwards we can discuss either the history of money or cryptocurrency and the innovations that it has within the industry, or whatever just comes up in organic conversation. So this is my presentation. To answer the question at the bottom, I do not think this is an event that we can afford to miss. This would be similar to Web 2.0, which was the internet's development. And I think that there's much more upside to this industry. And I don't think that we want to miss out on that in any way, shape, or form. So Andreessen Horowitz is a very large venture capital firm that invested into cryptocurrency and blockchain technology in the very early stages. And one of their founding partners, or founding members and partner, is Chris Dixon. And he's quoted for saying there are three eras of currency, and that's commodity based, politically based, and now with the invention of cryptocurrency, you have math based currency. Just a quick FYI, there is a large learning curve ahead. Just be ready and be open. You're not going to know everything about cryptocurrency. This is kind of like a car. You kind of have to specialize, and you'll know a little bit about everything. But as you get into the larger components, into the systems, obviously the transmission is going to be a different system than your engine. So you're going to learn different parts and different things. So just be open and find your niche within this industry. It's very large, and it's still very young in its infancy. So there's a lot of upside and potential. So just learn what you can, focus on as much as you can on the buying, the selling, the storing of cryptocurrency, and understanding the basics of blockchain technology and kind of how it works within these different cryptocurrency projects. And to go along with that, do your own research. This is not financial advice. I'm not a financial advisor. I do know some things about cryptocurrency. I've taken my time to educate myself on it, but don't believe anything I say. Look everything up. I have resources and references that I'll share with you guys to let you guys know that, I do look my stuff up, but at the same time, I don't want anybody to get in the habit of just believing somebody, some YouTuber, some influencer. Always do your own research. So a brief history of money. This is the brief overview. And it just shows that there was a period where there was non-metal money, a period where there was metal money, and that would be your commodity-based monies. And then there was the minted money, the paper money, which is the IOU, and then the fiat currency right now that we're experiencing currently today. And I'll break those down a little bit in detail as we move along. Non-metal monies in the beginning were things like cowrie shells or sticks that they would make tally marks on. And then they also had the rye stones in Polynesian islands. They had these stones, and the stones would be basically a communal ledger, and it would show how much people were owed, how much people had, and they would mark them on these stones. And because the stones were so large, they weren't able to be moved or otherwise, mess with when they were protected by, security or whoever was at the time watching it. So these were the original types of money. This is how you would keep up with your wealth. But obviously, for reasons of I'll talk about later, these weren't successful and they weren't scalable as commerce began to, fully blossom. After this was the metal money. Every area had their own type of metal, so they use different types of metal, not very interchangeable from nation to nation, very hard to determine value. So obviously we moved out of this era as well. And after we left the metal money, this was the end of the commodity-based money currency, excuse me, and we moved into a political-based currency. And that's what we're in right now, but we're at the last stages of the political-based. In the beginning, it was minted money. We had gold, we had silver, we had different coppers and things like that were used, and different alloys were mixed together in order to make minted money. And then after the minted money, which was more closely representative of true assets, we ended up getting into the IOUs, or the paper money. And this is where the dollars, quote unquote, would hold a value so that when you took them to the bank, you can exchange them for an actual hard asset. Like this says here, this $40 is redeemable for $40 million. So it's the sum of gold or silver. They'll get that in gold or silver. So these were the IOUs. And then after you move from this, then we moved into fiat currency. This is where we are today. Fiat currencies aren't backed by anything, to be honest. They're backed by labor. They're backed by trade negotiations and contracts that different countries have with one another, but they're really not backed by anything such as gold, such as silver, such as oil, or anything like that. So some kind of physical, tangible asset. And because of that, there has never been in the history of, so far, in the history of money, there has never been a successful fiat currency. And so, all of them eventually will work their way down to zero. And that's what we're seeing right now with the dollar bill, as well as being debased. And so I put together this slide really quickly to show the difference between money and the difference between currency. It's very small difference, but that small difference is, the catch-all, the pin that makes this this cryptocurrency so important and so revolutionary in this time. So money is a social and economic construct given credibility by social acceptance and consensus. And money is also a tool for storing economic activity. And so when you put these two together, you can see these two definitions together, you can see that the definition of money is truly a economic and social construct that allows you to store your economic activity, okay? And the difference between money and currency is that currency is unable to store its value, okay? And so, as I said earlier, fiat currencies have all been debased down to zero. And that's what is able to happen because of the fact that, as I said here in the slide, currency is printed or coded, because now they're not printing dollar for dollar. They're actually just coding it in the back office. But these central banks are coding this stuff. And as they're coding this money into existence, this quote unquote currency, this quote unquote money, this currency into existence, they're actually debasing their value, right? So imagine if you have a dollar in your pocket and it's the only dollar in the world, that dollar really has a lot of value. But as you begin to add more dollars into circulation, that dollar is now being debased and there's less value in that single dollar now. And after you do that, year over year, time after time, obviously you're debasing your money, and it's no longer able to store the value, or the currency, excuse me, is unable to store the value, which is why it's not money. But gold, silver, oil, real estate, things like that could be considered money much more than a currency could. So I put in this slide to just kind of speak about some of the things that are going on in the market right now with the fiat currencies. Obviously, the United States has done a lot of money printing. The European Bank has done a lot of money printing. And because of that, we're seeing high inflation right now. We're seeing higher prices at the gas pump. We're seeing higher prices at the store. So because of that, obviously our dollar is buying us less. So again, our dollar is losing its value. You can also look at this in Turkey and in Lebanon. The Turkish lira lost like 100 and something percent in 2 days or something like that. You can look up these facts. I don't know the exact dates or exact numbers, but just within the last 6 months or so, they've lost a whole lot of their value in the Turkish lira. And, as different economies and geopolitical things happen, dollars and people's currency are starting to lose value. And that's the biggest thing that fiat currencies differ from cryptocurrencies, which is still a currency because it's not backed by anything physical, but we'll get to that in a second. This is because of the inability of currencies to hold their value. Synonymous person named Satoshi Nakamoto came up with Bitcoin. Nobody really knows who that is or what group that is. They have their, speculations. But basically what this was Bitcoin was made so that it can be a peer-to-peer cash system, basically. And what you would do is, without a middleman like a banker, or remittance payments companies and other things like that, you would be able to send money from my wallet to your wallet without anybody having to touch the money first. It was the first one to, Bitcoin was the first cryptocurrency to solve the double spending problem. The double spending problem basically was because you're online, it's very easy to copy and duplicate things. So they wanted to make sure that if I sent you $1, I couldn't send that same dollar to somebody else, thusly doubling the dollars that I had. So Bitcoin was the first one to solve that spending problem. And because of that, it was, obviously the most renowned, first to market. A lot of people have jumped on that. That's one of the most expensive cryptocurrencies right now, but it's not the only one. And it may not even be the best case use, but it is the first. I put on this slide a couple of other ones, but there's tons of other ones. I'm not going to speak to any. I don't want to sway anybody's prices or anything like that. I don't want to sway the market, but there's different currencies out there. Do your research, and each of them has their own case use. So make sure that you understand what they're being used for and why. Basically, the Bitcoin was able to have a digital ledger through cryptography. They were able to take these transactions and put them into the blockchain. So each block is basically a transaction or a group of transactions that's been time-stamped and recorded into this immutable ledger. And so as those blocks continue to grow, the chain gets longer, and you can always go back and reference that chain of events on the ledger, which is why it's incorruptible. So as you can see here, through the picture, this shows the difference between a centralized ledger and a distributed ledger. Blockchain technology is the distributed ledger technology. It makes sure that every single node or wallet has a copy of the ledger. Instead of in a centralized ledger, you would only have one central entity that holds that ledger, i.e. the bank or the credit union or insurance company or whatever. So you don't have the actual ledger between all the different clients at the bank. Only the bank has that information. But when you're in a distributed ledger, you have access to all that information. You can just go online to a block explorer and you can look up look it up by wallets. You can look it up by transaction number, and you can find all this information. So it's very open, very transparent. And the nodes or computers, they're called nodes, they work together, and it's called a network consensus protocol. And basically what that is they speak to one another so that they can verify and ensure that each transaction is what it is. It was sent to the right person from the right wallet, and everything is on the up and up. And then if it's not, and it doesn't agree, then that transaction will be rejected and it won't become a part of the blockchain. Some of the current use cases right now that are disrupting industries are NFTs, which are non-fungible tokens. This is basically one of one that you're able to, one of one pieces, whether it be art, music, intellectual property, but it's just a one of one online in the blockchain. And basically you're the only person that owns it. And in order for somebody else to have it, they would have to buy it directly through you. There's no way for it to be copied or sold. And because you're on the blockchain, you're able to see the ownership records of that item. Also, there's decentralized finance, which is really one of the biggest innovations, in my opinion, because of what it's able to do to the banking industry. But decentralized finance is basically taking finance and removing the middlemen. So lending, escrow, forex trading, banking, sending remittance payments, all that kind of stuff is basically a part of DeFi, and is just taking over. And it's a really large market cap for those industry or those projects that are involved in DeFi. And for those third world countries and for those that are unbanked or unable to, get that accredited investor status, these decentralized finance platforms are truly going to revolutionize the financial markets. Also, ICOs is one of the new ways in which to crowdfund and bring in a large sums of money for projects to push them forward, and also to do charity events. Vitalik Buterin was able to take Dogecoin's ICO and give it to India for their relief during one of their, I think it was the COVID incidents that happened over there. Also, you see projects that are, able to scale much faster because of the ICO. So this is just a brand new, it's kind of like an IPO for a stock, but it's an ICO for cryptocurrency. But it's just a new way to bring in money and scale your project. And also RFID chipping and things of that nature is allowing logistics and supply chain to be put onto the blockchain. So that's another way that we're going to see some disruptions in the logistics section. These are some things that I've heard about in the near future that are coming. They're still working on some of them and haven't necessarily brought them into fruition, but they're looking at putting our voting on the blockchain. That way, again, it's very transparent. Everything will be a one of one. There won't be any way to duplicate or, come out of thin air with votes that didn't exist. So this is, something that's going to be very beneficial in the future, especially for some of these corrupted election cycles that we've seen internationally. And I think this will be a great way to, root out corruption. Also, they're talking about putting DMV records and healthcare records onto the blockchain. I think this will help a lot with the paperwork. But I also am worried about the security of this and making sure that this is not taken advantage of, and having people watch you basically, because again, if this is held by a central agency, they would be able to watch that blockchain and potentially put restrictions on people who are involved in that blockchain. So, we'll talk about that later, but I just want to make sure, that they're already talking about putting DMV records, healthcare records, and things of that nature. Anything that you would send to the Secretary of State, things like that, intellectual property, all that stuff is going to be on the blockchain. It's going to be much easier to look up, but at the same time, it's also, if not in the right hands, it could be restricted. And we've seen some of that stuff that up in Canada and in Russia right now. And then this is just another side, kind of part of crypto that a lot of people are starting to get into and understanding, is stable coins. And stable coins are really there to help lock in the returns that you get. And I learned this later on, but I wish I had known this from the beginning. But when you take your profits, you should probably take them in stable coins. Obviously, this is not financial advice, but you would take them in stable coins. That way you can ride the waves, ride the dips, buy the dips, sell high, things of that nature. But the stable coins are basically pegged, whether to $1 or to gold. There's some that are pegged to gold, but basically they're pegged 1-to-1 with whatever that stable asset is, and it's supposed to hold its value over the long haul and doesn't see the volatility that some of the other crypto projects do. So as those projects are moving, you should move out of those projects and take those profits, move them into stable coins so that you can take advantage of those highs and lows. Something I learned later on in the game, but I wish I had known early. And then also be on the lookout for central bank digital currencies. Few of the larger countries have come out with this, but in the Caribbean, they've already come out with it. And in China, they've already come out with the digital yuan that they're starting to promote heavily now with the Winter Olympics and piloting domestically. Also, they've come out with city coins, like New York City coin and Miami City coin, which are ways for the cities to fundraise for community projects, development, infrastructure, et cetera. So they're another innovative way to use cryptocurrencies to move money through governments and hold value of the government's wealth, or value of the government's holdings, excuse me. And then here are some crypto resources that I just wanted to make sure that people had access to. Wallets, I've used all of these personally, so that's the only reason why I've put them on here. But the hot wallets are wallets that are going to be connected to either your phone or your laptop, some kind of device. I've used Exodus. MetaMask is a great browser extension. I love it. It's very convenient. And also the Trust wallet is another very convenient wallet. Cold wallets are going to be your hardware wallets, your wallets that are like a USB. They're separate from your actual phone or computer. And this is where you'll be able to take your things offline and keep them safe from any kind of hacking or anything like that. Trezor, and Ledger are your two most, I'd say the most known, the most wide known, but there's others as well, and you can look those up. And then the exchanges that I've used or that I know are well are Kraken, Binance, and Coinbase. Coinbase is one of the first ones that was started, and I think they're the most widely used. And then they also have a wallet connected to them, the Coinbase wallet, and that wallet is very comparative to the MetaMask wallet, but not as convenient. But due to the fact that you're able to tie it into the exchange, it's very convenient in that fact. Also, there is a difference between Binance and Binance.us due to United States jurisdiction. Certain companies had to come out with a US edition and a global edition. Binance is one of them. So they have a smaller selection of tokens, but they still have the same usability and same features. And then the two most important white papers for me that I put on here are Bitcoin and Ethereum. The Bitcoin white paper is going to show you how blockchain technology and cryptocurrency work together and why, kind of what the benefits of it are. And then for Ethereum, that white paper is going to show you what smart contracts are. Smart contracts are like if then functions. So if this happens, then this other thing is going to happen. And that's really what helps eliminate the middleman, is because when you put things into these smart contracts, that smart contract is your middleman, except it's a program as opposed to being an actual person. And obviously you don't have to pay a program, so it saves you the fees and some of the transactional costs that you'd have to pay going through a third party. For news, you can get your news everywhere, but two places that I like, due to their fact that they vet out all their information, and they have actual journalists that have come over from other financial institutions that do the work. So I like CoinDesk, and I also like Cointelegraph, excuse me. And then there's others as well. Like I said earlier in the presentation, do your own research. Everybody has something to say. Not everybody has the best knowledge. So, cross-reference everything. CoinDesk also has a yearly event that I've been to, the Coin Census. It's a great event. They bring out big name people, a lot of fireside chats, panel discussions, interviews, things of that nature, project overviews and stuff. So I'd advise that or suggest that as well. And then for the last part, market data, you have to go on to CoinGecko and you have to go to CoinMarketCap. That's where you'll get all your data updates. That's where you'll have all the market analysis. You'll have Trading View, which will allow you to look at all the graphs and things of that nature. You can look at crypto as well as stocks. They have stocks on there as well. And they also show you a global market dominance, basically, of what percentage each crypto has within the market. So it just breaks everything down for you and helps you see where everything is at. And that's the end of the presentation. Hold on just a second. All right. And then, so technically, the CoinMarketCap and CoinGecko, though they share the same information, they pull them from different exchanges. I wanted to add this point in there. They pull them from different exchanges, so you may see different numbers on the two different sites. I just wanted to make sure I made note of that. There may be a slight difference between the dollars or the value, excuse me, but that's because they're coming from different exchanges and pulling them from different projects. So, I just wanted to get that out there. Again, do your own research, cross-reference everything. And if you don't see the same stats in 2 or 3 references, then I'd question it. If it's not consistent, then don't trust it. Other than that, that's all I had scheduled for today, for today's conversation. I wanted to just give you guys a brief overview of money and just a couple of the innovations within the industry. Obviously, that some of this is base information, but I just wanted to make sure that the community as a whole had an understanding of crypto, where it came from and things like that, and kind of leave you some breadcrumbs so that you can get started on your journey down this path. If you leave your email, I have a resource guide for everyone. And I'm also working on my book right now, which are the pre-steps to investing in crypto, making sure that everybody's software, hardware, and their phones are protected, because a lot of people are exposing them a lot of personal and private information, not realizing what they're doing. So I just want to make sure everybody's setting up properly. Also, last point I wanted to put in here is, being invested in cryptocurrency is being invested in banking and personal banking. You have to be willing to learn about banking. You have to be willing to be your own custodian. There is no third party. Nobody's going to hold your money for you. Nobody's going to make moves for you. So you really have to know every piece of every transaction, who you're sending it to, why you're sending it to them. And, there's a lot that goes into this. So I just want to make sure that, as you're growing in this, that you just, start from the beginning and take it slow. Don't throw it all in and because it's a lot. And if you don't take it slowly, it can overwhelm you. And obviously that can overwhelm your money and your finances. And once it's gone, it's gone. There's no FDIC to come back you up and come get it from you. I've taken some losses. I've seen others take losses. They say you're not really an investor until you've taken some losses. So, just be prepared for that, but also just protect yourself. Everything you do needs to be encrypted. Everything you do needs to be written down somewhere, backed up somewhere. Don't put anything in the cloud. Don't put anything in, digitally, because again, hackers have ways to get that information, and you don't want them to get access to your cryptocurrency, because it will come up missing and there will be nobody to back you up. And with that, I appreciate everyone. If there's any questions, I open up the floor and we will get those answered, or pull up we can share a screen and I can pull up a search bar and we can figure it out for you.